Good afternoon. Welcome to Options Tender. It is Sunday, 10:30, 22. We're almost done with the month of October. What a month it's been. The volatility is crazy. Big moves down, big moves up. But overall, we're still bearish. Everything is bearish. There's nothing bullish about this, but I am going to give you a slightly less bearish scenario that I do not think is likely. Um, we will get into that in lower time frames. But if you're new here, go down to that bottom right hand corner, hit that options tender logo, and subscribe. And don't forget to like these videos so we can get this information out to other traders, whether you're new or seasoned. Um, okay. ES, multiple time frames. ES on the monthly. Starting off here, we had our channel 1, 2, 3, 4, 5 wave move into the channel top, and now we're headed south. Everything is headed down. We have MACD, RSI. We have lower highs, lower lows on the higher time frames here. You know, we had this bounce off the 50%. We said we were going to do that. I didn't think it was going to be this high of a bounce. But and there's a reason for that. I'll show you on the lower time frame. We also hit that 50 simple week moving average. We did expect a move off of there, but we're still headed down, and this 8 EMA is trending to the downside. That is our downtrend indicator. Look at this last move here. You know, it's same thing. We had huge moves down, massive moves, almost the same size as the candle up. Same thing is kind of happening here. I'm not sure that we get much higher, but it is possible, but doubtful. Okay, moving to by the way, our next target down here should be the 618, bottom of the channel as well here, and then we'll move down from there. That's around the 3200 area is what I'm looking at next. Down to the weekly. After breaking down from this large bearish rising wedge, we're making lower highs, lower lows, lower highs, lower lows. Now we ended off just above this area. Remember, it's not just a line. You see how the price goes above, pokes below, above, below, but you know, this is a solid area. You see that this represents resistance and support. We're also at the 20-week simple moving average as well. We're looking bullish on this time frame. And what I want to show, and I haven't shown this yet, it's been there for quite some time, is this possible weekly bullish divergence. This is the, I guess, fly in the ointment for bears, for the bullish scenario. It's trying to cross right now. You see the histograms. We're right there where we're still underneath it, haven't made the cross yet. When you see a green, that means we actually had the cross. So this is a big week. I would say this is a big week. We end up closing up much higher than you know, we're gonna have a bullish scenario, a bullish crossover, and it can fake out, but with this divergence, you know, you're going to have a lot of buying with something like that, and I can imagine that we'll have more weeks ahead to go, because once you start building momentum off divergences, we're, you know, likely gonna hit like a downtrend line and have a few weeks to, you know, months if a divergence plays out. I don't see that happening. I'm still in the bear camp for the Fed. The Fed, until they change their position, I'm not changing mine. So this is not going to fake me out. We can have a lower low on the MACD and the RSI. You know, this could burn through that divergence easily if we see a next leg lower. All right. On the daily, trend is our friend. Okay, I keep repeating, this is the next area that I'm looking to get back into. We bounced off the top of that as support. Our next step would be to get into that zone. Now, what's happening here. We have lower highs, lower lows, but we had a 5-wave sequence that ended, and now we're correcting, and it's a very corrective look to here into the downtrend line at that point. So that's also where the 100 day moving average is as well. Now, I do see a lot of people pointing up to this 200-week moving average, and if we get that crossover for the weekly time frame on the MACD, we'll definitely see this price area. Maybe that will be a back test to this breakdown trend line here. That was such a big area that we spent a lot of time at, but we broke down from it, and now we're trying to back test some zone here. But we're right at that 3,900 area. A few weeks back, I said that was a significant area for me. I thought that was a great shorting opportunity. I did start shorting earlier and got stopped out because this on the lower time frame, this was a completed zigzag here, and I thought this might have been a 1-2 1-2 setup for a much lower, faster move. Now I think this 5-wave move sequence is over, and we're back to we're getting a larger 1-2 and then headed down. So these bearish scenarios are well and alive. The one was invalidated, that my primary really bearish count was invalidated. So we're looking for the secondary. We had a positive divergence on the daily time frame, and that's what's playing out right now. We're getting into confluence, so we could easily flip at this point. Now we have FOMC on Wednesday, so I do understand that price can move up in anticipation for whatever reason that people say in the news, and anticipation of a pivot and things like that. But there's no pivot coming. Not with inflation, GDP and stuff like that, how it is. So I'm really confident in this being a corrective move and us moving lower and pretty quickly. And it can start to happen even before FOMC. So we'll see even tonight, overnight, Sunday into Monday, if something starts to turn even then, as soon as then. So what else is there to look on here? We were looking at if in that bullish scenario that I was talking about, and I don't think this is the case, but if for some reason this was just a expanding falling wedge, and we have a 1, 2, 3, 4, 5-wave sequence finished, and we have a much larger correction happening, or even a bull run, if that weekly bullish divergence plays out, then that would be that scenario there. And I wouldn't believe it until we actually broke out from this this downtrend line from the beginning of this correction. So until we broke out from there, I wouldn't believe that would be happening. So let's see here. Let's go down to the 65-minute and see if there's something that can add on to our thesis. Okay, so on the 65-minute, we have this rising wedge, like a bear flag pattern. And if I zoom in a little bit more, you'll notice that I got bearish after this zigzag here. It appears to be some sort of 5-3-5. At least it did to me at the time. And so we started being bearish at this point. We came down and made a higher low and started moving to the upside. Now, this also could be a 5-wave move. So in my mind, if for an Elliott wave terms, this could be a double zigzag here. Okay, that would be a 3-wave move up. That's a 5-3-5, a correction, which this is a pretty large correction. So to me, this is one move in itself, large correction, and then another move itself. And this would be another zigzag, 5-3-5. So if that's the case here, then I'm not sure that this is actually complete. Okay, this might be, let me expand the screen just a little bit more. this might be a 1, 2, 3, and we have a little bit of correction going into Monday, and then one last little pop. Now I have the downtrend line here that, and we're also in the supply area, so I don't think that that's if we're going to get much higher if we do start to move down, and then make a slightly higher high here. This is my confluence. This is my higher area. If we start getting above here, then I'm going to let things play out. Some people think we're going to go to 4,000 at the 62% retracement. I don't think that's the case. I think we have our downtrend here, but we're ready for it if it does. We'll just get stopped out and wait for the next setup. Now, if this is a zigzag, then this has to be a 5-wave move that ends it off as well. So that would be incomplete. But if this is just A, B, and a C, then this might be done. The relationship, if you do that, the Fibonacci relationship from the bottom of A to the top of A, so that length, if we go to the bottom of B, the length is we're right at that 100% area there, relationship from A to C. So that would be an excellent spot to short. And then the 127 is also at the 39.80 if we do get above that. So it does look like it's complete. So that would mean, excuse me, I think I said this wrong, but if this is an A, B as a zigzag at the end, where this is 1, 2, 3, 4, 5, then this would be complete now, where you have a 3-wave move up here for 1, 3-wave move down for 2, 3-wave move up for 3, 3-wave move down for 4, and finally 1, 2, 3-wave move up for 5. So you see how that's going. We could have just a little bit more space here, but I am short already in the options guy, the Discord that I'm a part of. I already shared. I'm short IWM, DIA, SPY. I'll be shorting in the futures, probably checking things out overnight. I have UVXY, UVXY calls. So I'm pretty well loaded. I was also here, made a little bit of money, but then got stopped out on most of the other positions. And then I loaded back up here as well. And so we'll play it the same way. If we start to come down, you take off a little profit. And then if it starts to break back up above, then you're going to get stopped out. So, all right. And if from the indicators from the RSI, we had our bearish divergence that played out with that, earnings from big tech. Everybody did terrible. And then Apple holds the whole market up the next day on Friday. So, but we made, we burned through that divergence, and we're making a new level here. So this also might kind of say, hey, we do have just a little bit higher to go because there's no divergence there as well. It doesn't have to in order for us to make a turn, but if price comes down just a little bit again, and then makes a higher high, but the RSI and the MACD make a lower high, then we'll have just another divergence. All we need is another slight one, and then the price could head down from there. So another scenario before I finish here is we had let's see if we can probably just go back to the daily time frame. And I want to give one of the scenarios here. Let me get the screen a little bit more clear. You know how we spent a lot of time in this area after a 3-wave move correction there. We went sideways for a little bit. We can have a miniature Monday, Tuesday sideways move as well, if that's the case, into FOMC, into Wednesday. So anything's possible. The setup, we could be finished going up, but maybe it wants to wait and to see what the FOMC says and this and that. But I don't see it going much further. We start breaking above this 3,900 area, then it should be a pretty quick move up to 4,000. and then that's another opportunity to short. But like I said, this is a big zone. We'll just have to watch price action, and I can't assume anything. The MACD still headed north there, but it is right at the zero line, which makes a good resistance zone. That's the bearish zone. It's slightly above it, but yeah, good separation here. So yeah, yeah. There's two stories. There's a bearish and less bearish scenario, to where we could go up on Monday and Tuesday, maybe up to 4,000. But that's how the market works, and I can't tell you for sure that we won't make it up there, but I know that I'm playing with my money. I'm putting my money where my mouth is, and I think we don't even have a signal that we're reversing yet from candles, but I don't think we go much further from here. And if we do go up to 4,000, that's what trading's all about. We get out and we get back in. Okay. That's all I got for you this weekend. I hope all this helps. I do see a bearish scenario playing out really soon. And so you guys be careful out there trading, and I'll talk to you probably on Monday or Tuesday. We have Halloween tomorrow, so I might not put out a video then. Yeah, have a great day. Don't get caught running with the bulls.